Um, hello, welcome to this video where I'm going to just break down a little bit of DXY from a higher time frame and be able to kind of get the logic of where the dollar might be heading in the next coming month or week. Yeah, so we have DXY here on the D1 time frame. Um, I'm seeing a bullish pattern trying to form over here towards the upside, towards getting into these areas over here and this fair value gap over here. Okay, so we have that on the DXY, just to highlight that. So we have that fair value gap, we have that fair value gap over there, and that is going to we have also that fair value gap over here in terms of the daily time frame, and we have had this area which was an area of support for quite a long time right here in this area, so we can just extend that to which was an firstly it was an area of resistance, of course, and now it's acting as an area of support. So we have that area over there, just increase right over there so it can be, there we go. So we have that area which is an area of support, right? So yeah, and currently we have this area where there's fair value gap and there's fair value gap over here, then there's liquidity zone here and there's liquidity, so we might see DXY actually coming all the way to last year's high over here, but this is an area of liquidity where people have short positions to the downside and where there's a lot of short positions aligned up right above it, so the market could actually come back down where there's huge investors coming in right over there. And right now we are in the period of November, and during November usually the market is a bit not so you know heavy. So we shall see even when it comes to the earnings, when they're closing their books at the end of the year. We'll see how the market is going to be playing out in terms of DXY is concerned. We'll see how they'll actually be panning out. Whether there's going to be some volatility in the market. So let's see from last year. This is January. I'm looking for last year. This is December, November. So we can see that last year there wasn't so much activity in terms of movement, in terms of the DXY is concerned. But there was quite a movement, but it was mostly of a consolidation during the month of November and December. As you can see, this is the month of November and the month of December right over here, between this period here up to that period over there. This is January now. December up to that period. As you can see, there was just a consolidation. The market didn't move much. Yeah, so we also see that probably the same thing is going to happen here. As from the month of October, things have been slowing down within the market, and only one huge candle to the downside on that actual day, which was the NFP that happened during the month of beginning month of November. So we might see the market maybe breaking up because this looks like a um, bullish movement to the upside, and the market has been bullish for quite a while. So this is more like a correction that could be going up, but at the same time as well, I am looking at these zones over here, as this is a break of structure and the market didn't close above that area. So the change of character right over here. So we might actually see prices coming down. I don't know, maybe we might see that because there's fair value gap over here as well that the market has to come and cover up. We have positions right over here. People have to come and take the last week's low out, and the market then heads back up. We have liquidity here, buyers are here, stuck here as well. We've got so many buyers as well in that area. So we might see that there's lots of liquidity within that area, and right here there's fair value gap. So there might be lots of people buying, because people were actually buying in the market over here, buying as the market was going up, because there was a momentum on this day as the market was moving up. So definitely, the big banks would want to utilize that opportunity and actually take up the market with them. So yeah, that's what we have on this. And then from there, if we move down to the lower time frame, which is the H4 time frame, um, we see that the market has been going on a sideways until on this day, which is the NFP. broke down, and then market decided to retrace. So we might see the market coming back up to this gap over here, which I highlighted right over here. So we might see the market coming back to this gap, then we'll be seeing it coming down. I don't know, maybe it might do that, maybe it might not, but at the same time we're looking that there's a bullish pattern that is actually forming in this aspect. So we might see the market doing that, or market not doing that. So we might see even the market coming all the way up to here. We'll just wait and see how it actually pans out and plays out during this particular time period. Okay, and then from then, let's just get it down to the H1 time frame so we can be able to find trades and opportunities within the markets. So we can be able to trade and find opportunities within the markets. Um, so on the H1 time frame, we see that the market, maybe we might get a little bit of scalps, a little bit of scalps over there. We might see that the market is going down to that area over here. We've taken out liquidity right here in this area. Price is broken structure to the upside, so we might wait for price to actually get to this fair value gap over here. Let me just do that so we can be able to see clearly. Right, so that fair value gap over here lies positions over here, so whereby the market would actually want to trace back to that area, then go up to come and fill up all these areas here. We've taken out that liquidity zone, so the market broke down. If we close below that area here on this H1 candle, which is just closing in about 4 minutes time, so might see prices actually coming down. We will try to get a buy from here towards this high over here, taking out that high, or towards these highs over here. A 1:2 or 1:3 risk reward, but mainly the 1:4 and above is the best one, so we'll wait for that as well. In terms of H1 is concerned, so yeah, that's what we have on the DXY. Then now where we actually execute the positions is on GBP/USD. There we're just looking for a directional bias, and that we can be able to correlate between the two pairs. So now we have the GBP/USD and also the EU. That's where we usually execute our positions. So on the GBP/USD, we have fair value, we have liquidity, all the way up to there. We have liquidity also on the downside. Hence, we are in a range. So the market wants to take out the liquidity that is everywhere, that is on the opposite side, and be able to move in a certain direction that the market really wants to go at. And that's why we have so much liquidity within the market, and that's why the market has to create liquidity so people can be able to, so that the big investors can be able to go and grab that liquidity and be able to execute their, because the way they enter into the market, they enter using liquidity. They cannot enter or move the market without using pending orders, because they use huge amounts of money, and you cannot just click a huge amount of money into the market. Hence, they need to use liquidity to enter into the market, and news usually drives the market towards the area of liquidity. So hence, we see that on NFP day, we have the market rallying all the way up, grabbing liquidity all the way up to here, coming to this order block over here, then breaking down to that area. Also, we see that the market actually made a breakout structure, then came back, closed below that breakout structure, and didn't retest back up there. So we might see the market going back to retest that area, then the market coming down in terms of the GBP is concerned. So we might have the same thing also on the EU. So yeah, that's what there is on this video that I wanted to share with you. I want to share with everybody, and have a very lovely week and a lovely trading day. Thank you.